You talk about nerves being frayed. It certainly doesn't look like it if I look at a chart of cable. I know we're early in the year, we're only in February, but we are up year to date. We trade at 129.68. Are sterling traders unprepared for a no-deal Brexit?
Yes, I think in one word is yes. And again, we come back to this view that what businesses in the UK and investors are seeing is somewhat different. If you're a business, you have to prepare now. You have to put your last-minute preparations in place for a no-deal. You have no choice because that is the road that we are on. And sterling has always traded with this mindset that it's not going to happen. We can't have a hard Brexit. If you look at the market consensus has never been, or it's never favoured a very high probability of a hard Brexit. It's always been that there will be a compromise, that there will be a soft Brexit. So the market's mindset, the consensus mindset has always been that a hard Brexit will be avoided, meaning that if there is a hard Brexit, yes, sterling traders are definitely unprepared.
I've got a chart of the gilt curve. It's been steadily flattening, obviously far from inversion, but flattening amid the Brexit woes, Jane. We do, of course, have a Bank of England decision this week. Bank of England in a Brexit bind, as we've said many times. What are you expecting to hear in terms of the guidance?
Well, it's going to be interesting because they do have to announce the inflation report, therefore they do have to come up with a new set of forecasts. But I think we can all understand that the forecast of what happens to the UK economy is extremely dependent on the sort of deal we get, whether or not we get a deal. So it's a difficult position, I think, for the Bank of England to be in. Now, what we have seen is, of course, inflation coming down a little bit quicker than perhaps they'd expected. We can see a change to their inflation forecast. But, of course, what happens to sterling on March the 29th is going to be really important as to their inflation forecast. If sterling does fall a lot, if we do get that hard Brexit, then we get more inflation. And that is a risk for the Bank of England. So in my mind, you know, they may have to hold on to a little bit of hawkish rhetoric just to try and put a floor under the pound, just in case there is this pressure on the pound on March the 29th. Whether or not they would pull the trigger on a rate hike if there was a hard Brexit, though, it remains to be seen.